Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now let's talk about India's CPI inflation data that came in yesterday. For July, it came in at a 98-month low of 1.55%. Yet it was a tad bit higher than the CNBC-TV18 poll, which we estimated the CPI data to come in at 1.3%. Now, July CPI was expectedly dragged down by the food index. Latha is joining in with us now to give us more details on this front. Good morning, Latha.
Well, quite a bit of records, actually. As you pointed out, it is a 98-month low or something like an 8-year low for inflation at 1.5%, still lower than the still higher than the 1.3%, which our poll had thrown up just to set the record. It is 1.55 in July versus 2.1% in June, and year ago was 3.6. So, 3.6 itself is not a very high base, but you're getting just a 1.5% inflation. The food index is very important. The inflation has been pulled down largely because cereals and pulses, the weightiest elements, are falling even month on month, right up to July. Normally in monsoon months, they start rising because of traffic dislocation, but this time it's been falling because sentiment is so good with the good monsoons. Other things like meat, egg and milk have also been falling. In fact, food is also a record. It's a 78-month low, the food CPI. It's a deflation. It's minus 2%. It's minus 1.75%. The poll had expected minus 2%. The vegetable inflation year on year is lower, much lower, double-digit lower, but month on month it has gone up, and that's why you still see tomatoes at 100 rupees or even 80 rupees, even though the vegetable or the overall food inflation is lower. Core CPI is important to note. It is lower. It's 4% compared to 4.4% in June. And that means, the Asian disinflation is helping, base effect is helping. More importantly, if you exclude gold, then the core inflation falls to 3%. So all round, the numbers are positive, but the market won't react. It will react more to the US CPI number, which has come in lower than expected. For July, it's come in at 2.7 against expectations or 2.8. So we may see a minor fall in yields in the Indian market, but no, the Indian bond markets are sulking for other reasons because there are going to be no more rate cuts. Don't expect this to have an impact.
Okay, Latha, thank you so much for that. Important updates that are coming in India's inflation data point as well as the US point as well. So keep an eye out on the yields as well.